I want to welcome you guys to the video and to our event. My name is Ken Brown. I work for Business Class Asia of Bangkok, Thailand. We're going to talk to you today a little bit about some retirement issues with taxes as well as services that I provide, along with my counterpart Thomas Carden of American International Tax Advisors. We're both located in Pacific Place next to Landmark Hotel. Thomas is in Building 1 and I'm in Building 2. But we wanted to share some information about what it's like to the issues that American expats are facing while they're living in Thailand, and the some of the benefits and things that they may not be aware of with that. I want to take a second to introduce you to Thomas Carden first. Again, of American International Tax Advisors. Thomas has a long history and experience with taxes. His father was a CPA, and he was raised in a tax environment, and he did taxes for a number of years with his father, followed by 5 years with Jackson Hewitt as the international tax manager there. So Thomas was the guy that got all the questions from all the different offices. So he's aware of a lot of different situations that American expats face while he was living back in the States. He went on to get he got a master's in international tax law and finance, and he's able to share his wealth of education and expertise and knowledge with the tax issues that Americans are faced here with today. Thomas is going to tell you a little bit more about some of his experience with taxes and some of the benefits that you have or may not know about while living in Thailand. Thomas?
Thank you, Ken. Probably no more murky issue in U.S. taxation than taxation of pensions overseas. This is compounded due to the fact that several people, some people try to hide money overseas with this, and oddly poor definitions in the IRS of what a pension even is with this. But that's not really the primary issue that U.S. citizens have here in Thailand. Okay, the past history of this, how taxation of retirees has been that the United States taxes the pension, when this is IRAs, SEPs, KIOs, everything but of course a Roth in the United States. Now, by the broad definitions of pensions by the Thai United States Thailand tax treaty, fortunately all of those count as a pension for the tax treaty purposes. This is really, really important because without the tax treaty, what would happen is that the United States would fully tax those pensions, and then the Thailand, if there's no tax treaty at all, would have the ability to tax that income as it's brought into Thailand within 12 months. Okay, that would be true double taxation. But the Thailand tax treaty exists to break that cycle to this. Now, there's two ways to do this. Okay, there is the fact that if it's done sort of the traditional way, the United States has first right of taxation because the income originates there, and then Thailand would give a tax credit back to the United States on the income paid using the double taxation with this, foreign tax credit to it. Okay, although to be truthful, the Thai government has not really had a way to track that or report that, but that is what the law actually says to this. Conversely, the tax treaty talks about Social Security to this, and Social Security would be exactly the opposite. Social Security is taxable only in the country it arises to this. So if you have Social Security, and Thailand decides at some point in the future to start taxing those distributions into Thailand, it will be free of tax. That's an absolute conversation that we had literally earlier today with a couple. They were just getting Social Security, and he was Thai, she's American. They wanted to get her Thai citizenship, but the Thai government was saying he has to pay taxes on his Social Security, but the tax treaty is very, very rock solid in this. Social Security for retirees here is only taxed in the United States. Okay, but then that leads into 401ks, IRAs, standard pensions. There are still some of those around with this. Okay, this gets to be a lot more complex. The good news of this is that's the reverse of what happens with Social Security. Only Thailand has the right to tax those pensions under Article 20 of the United States-Thailand Tax Treaty to this. And I'm going to paraphrase this to make this a little bit easier to this, that pensions are taxed in the state you reside in, okay? State being a country, and that would mean that if you are resident here for purposes of the tax treaty, you are able to use Article 20. Now, here's where this gets a little bit controversial, okay? Article 1 is called a savings clause. It does not normally allow for Article 20 to be used by United States citizens. However, there's a bit of an unusual issue in this tax treaty, and I'm going to give you guys the first part of this. The first is that under normal circumstances, Thailand, only the United States would have the savings clause to this. However, in this particular tax treaty, both the United States and Thailand have the same rights for the savings clause with this. And it effectively says, United States citizens and Thailand citizens can only use these sections of the tax treaty regardless of what everything says to this. So you have a few exceptions. Social Security is a definite exception on this. Pensions are not. So what you end up with is a tie situation over which country can do this, or effectively no citizen could use any part of the tax treaty because of the fact that both claim the savings clause with this. It's a logic fault with this. However, and this is why you have to come into our office, deeper down in the tax treaty, there's a tiebreaker in here. And I'm not going to give you that terminology that is found in there, but that's effectively what it is. And in that particular section, it talks about United States citizens who are residing in Thailand to this, and allows them to use more of the tax treaty than the savings clause would allow. The key to that, though, is residing here in Thailand. Now, here's the practicality of this, what this means. Okay. You're making $100,000 in the U.S. and you're paying, say, $30,000 of tax in your IRAs and 401ks to this. We file the regular return for you. We put the gross distribution of $100,000. We put the taxable distribution of 0 on that. We then add in a tax treaty declaration with the very specific legal framework of the tax treaty to this, and the IRS will issue a refund of any amount withheld into that tax treaty. Now, occasionally, the IRS computer systems don't pick this up, and they send what's called a CP32 notice where they believe this is a math error. In that particular case, we have to send a response back stating what the tax treaty says, and that about 99% of the time alleviates the problem. Occasionally, you have to send another letter back that clarifies what the IRS questions are and allows us to go through. We've had 100% success on this, and we've even had to at times go through an audit. The auditor, we've won on the audit, and we've also won when at one point the IRS claimed it was a frivolous return thing to this. Somebody was a little bit overzealous in the IRS. We have a copy of that letter in our office where it was overturned by the IRS. We've won and battled with the IRS over this. We've done this more than 1,000 times, and we've had a 100% success rate. Again, though, this is complex. Do not try this at home. You have to understand this very, very intricately because the IRS will question this tax strategy, and you have to know the exact terminology on doing this. But with this, the end result of this is you are free of U.S. taxation on your retirement income, and unless you remit that income into Thailand within 12 months, you are free of Thailand tax because it's a territorial tax system. This effectively means that you, as a retiree, are able to live free of tax globally in Thailand if you retire to this. But again, don't try this at home. You can call for a free consultation. Come into our office if you'd like to. We're actually up here in Chiang Mai right now. We come up on a regular basis. We can schedule appointments here. We can schedule appointments in Pattaya, Hua Hin, all the way into Phuket because we travel on a regular basis. But do not try this at home. This is a very high level of specialty with this, and the legal wording has to be exact with this. But please do give us a call because we think we can help you save a large amount on tax. Thank you.